Good day all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for Friday, the 5th of July, 2019. And I'm very early. I'm at 2:30 p.m. Central Daylight Time, which means the settlement prices aren't going to be here, but we're going to be close. I doubt too much is going to go on. A lot of traders didn't even come in today with where the 4th of July was. But the action of the day that drove stocks lower, and they have bounced back nicely and broke gold very hard under the 1390 level, but it's also bounced back. The simple fact is that more jobs were added. The non-farm payrolls went up by about 224,000. Last month was even revised lower to 72,000 from 75, and it put into doubt the idea as to how many rate cuts the Fed may go ahead with and the timing of those. So that sort of changed things when the market said, gee, look at how strong the jobs number is. Now, they'll argue over the weekend to see what goes on. But more important, I believe it's this coming week, Fed Chair Powell speaks before Congress. And at the end of the month, we have our FOMC meeting. The market's going to glue to every word that he's saying and either say, nah, he's staying on that dovish pattern, or maybe not. Another thing that this week we'll be looking for: where exactly are China and the U.S. in the negotiation? I know they're supposed to start face-to-face this week, but that's not my question. My question, and I was on Bloomberg TV this morning, and I asked the question of Guy, and I said, nobody seems to be asking, has China accepted where the U.S. thought they were when the talks broke down on intellectual property? Because all the rest of it, buying produce from us, doing all this, they're going to want to be our great friend. Nah. I think we've gone down the road if they don't come up with a way for us to have our property and that of the rest of the world that does business with China protected and means of enforcement. Why would President Trump go ahead with any deal? That bothers us. And we may very well be at a point we don't get that answer and these talks just drag out, and that keeps the Fed very much in the dovish camp. That's what we have to see. There was a Fed report out today, and I wrote about it in this morning's information, showing that the Fed has got concerns down that road to a degree. But the dollar, strong, got back over 9,700 on the idea that maybe there wasn't going to be a rate cut, and that put down most of the foreign currencies. You can see most of the metals are lower on the day. Bonds and notes, well, of course, they reversed course, and we'll get to see these charts, and you'll see where that's at. And energy markets, well, they're doing all right. And I just looked before this show, literally 3 minutes ago. I wanted to see what the 14-day forecasts were on the country for heat and dryness. It is picking up, so it'll be interesting how the bulls handle that in natural gas, because that's an event they need. When we take a look at a monthly area chart of closes, purely that with an 18-month moving average of closes in red, the market has gotten over that, stayed over it. It challenged it once recently back here. We came down in the month of May, challenged on that break the 18-month average. June picked up, and we're still picking up into July. Bullish. When we look at a weekly area chart of closes, the market, of course, this is that break back in May, and then the market came back with a vengeance, and you're going home still for the week up 49 points or so in that general area, new all-time high close area. When you take a look at the weekly bar chart, this is a market that still looks bullish. We had that spike down, and the market launched forward again. Its pattern isn't as bullish as I'd like to see. You don't have the pattern of a trend. What you have is, a market that's gone to an all-time high, a market that when you just physically look at it, you say, okay, there's a market that went across these highs, it came alive again. But I like to see higher highs, higher lows. I'm not getting it. I'm getting that, if you will, this lower low break, a hard one, then all of a sudden you run away. So my question, and it's always the most difficult question, is if one were buying and you put a stop under the most recent low, that's pretty far away. And I wonder if, again, this is one of these type of trades where the Johnnies that didn't get in time still aren't in. They keep chasing the market to these higher levels. A lack of yield, at least you get dividends with some stocks. You've got a shot for upside momentum. It's the Johnny-come-lately plays. As for the market staying over the 18-week average, it is, which is also over the 100, which is over the 200. So where's the resistance? Resistance is right here. The upper Bollinger Band, which if I step back here, you haven't hit since back in September of last year. The first challenge of it, I think, will prove to be a resistance point. We'll see how well that holds, my theory. The high this week was 30.06. The 30.12.5 area is that number. It might be a little higher when we reopen on Sunday, but that's where that comes in terms of momentum up. So what I have is the bias up since the market's over the 18-week average, resistance right above the market at the upper Bollinger Band, which hasn't been hit since last September, that particular type of technical indicator, and momentum is pointing up. In the NASDAQ, it's the same thing. It's one of these, you break hard and you just go up. Very hard to catch these type of trades because it doesn't give you pullbacks, be it if you're bearish and you want to get a rally to get short, or bullish where you want to break to buy it. It's not allowing it. We didn't make it to the lower Bollinger Band. The upper Bollinger Band is the next resistance at 80.08. Momentum up, bias up. When we come to the Dow, similar but a little stronger chart, because in this chart when we look here, we see we did break to the Bollinger Band first. That's where I would have looked for first support. Secondary support, if it slides more, is the 100. You could see how it got there and whipped itself right back up. Then the market followed through, and this was June 14th. Now the market's following through at the end of June. Markets right through here and even reaching higher into the end of the first week of July. Resistance comes in at 27,134. Momentum up, bias up, but like the others, you're not getting the pattern of higher lows, higher highs. Where you've got the pattern with this week's close of higher lows, higher highs is in the Russell. Higher low, higher high. This market has not hit its upper Bollinger Band. I can go back with you to September again. So is it going to be strong enough here to go? At least on this chart, we know that if the market takes out last week's low, what it does is it throws out a story that it doesn't have the power to make it and try a real run. What else do we know? Because of the way of the formation, I would expect this combination of the 100-day average at 1552 and 1551, the 18-week average of closes, going to be rather formidable support points. And the blowout would be if the market, I would think, takes out that low, then the traders would go back to the drawing board. If it kicks up, why not the upper Bollinger Band? In the VIX, on the daily charts, the pros had a good day. I think they were selling on the dailies, as you know, the lower Bollinger Band. Now, on the weekly, it's a little different world. You've got lower highs, lower lows. You're still very much in the bear camp. Bias is down. Momentum is down. Support back here at the 1097 level. When we look at the 10-year note, this market has had a pattern that was riding from May. The upper Bollinger Band would get over it and then back under it, down again, and now the market has got what we call an outside week down. And that means you made a higher high than last week, a lower low, and you're closing lower on the week. Momentum is still up, the bias is up, but the trend changed. Now you've got a lower low and a higher high. I call this market finally reached a point where that euphoria came out. It's not bearish. Now the market's sort of in a pause at this point. I see the same thing in TLT. It didn't quite get up to the upper Bollinger Band this week. It had been running it, so that's not important. Momentum is still up, bias is up, but you got the higher high, lower low pattern. In the dollar index, you ran back from the lower Bollinger Band, and you know what I say over and over. The first challenge of a Bollinger Band high or low is often an attempt where the market rejects that. In other words, it tries to reverse, which it did. It got down to it actually right here on this week, went a little lower last week and going, oh, does that mean we're going to the 100-week average? If not, well, if you bounce from here, one of the resistance points would be the 18-day average of closes where the market went. To negate the downtrend on the weekly chart, you got to take out 97.58. Right here in the 96.95 area is probably where the longer-term traders are playing the short side with the lower highs, lower lows, still downside bias as you're under the 18-week average. Their dilemma is momentum stalled on them. But that I don't know that stopped them from playing the short side. In the eurocurrency, it's the flip-flop. The upper Bollinger Band stopped that whole rally, but now this market has fallen back to the 18-day average, and the question is, do the pros buy it there? and not let it get back under this break low, which was specifically, what is that, 112.04. So the risk is not small, it's 90 points. So it's a lot of money to be putting at risk, but we'll see if that's what happens. In the Mexican peso, you've had a pattern now of lower highs and higher lows. I don't see that as a trend. I see the market caught between the 18-week average and the 100-week average, and momentum flat. Difficult market. Canadian dollar got up and going, and it's been able to push over the upper Bollinger Band, putting into play that if the market's going to continue this rally, maybe the 100-week average, 77.13, becomes the next play in the market. But everything else on the weekly chart is still very much in the upside. You're ahead of yourself whenever you're a Bollinger Band over it, because 95% of the time the market trades within the bands, not outside of them. In the Japanese yen, a market that's tiring up at the upper Bollinger Band. Also a market that got jolted today when the idea, gee, the Fed isn't going to lower interest rates. That's the possibility with that jobs number. I don't know, but it jolted the market. It's also July 5th, the day after the 4th of July. A lot of traders aren't here anywhere in the world. They're making a long weekend out of it. So got to take this with a cup of job, as I like to say. But in any case, higher lows, higher highs, still an uptrend, but divergence. Momentum is saying this market is ready to break down. You got to stop that divergence if you're going to be bullish. Bitcoin, it's gone from 13,915 to a low this week of 98.05. I wish you the best trying to trade this market. What a son of a gun play. And at the end, it looks like we're losing the embedded reading. If that stays lost, you do put, in theory at least, the idea that price and the 18-day average might be getting ready to make another run at each other. But what a drop that was. That's, you know, when you look at it, heart-stopping, what, 30-some-odd%. In Brent versus WTI crude, you're still taking in the differential, which got out to as high as recently the 10.99 level, all the way down this week to 6.71. When you take a look at the weekly chart, you're in a bear trend, lower highs, lower lows. So this market is looking at how world trade has gone and saying to you a story that, you know, demand's not there, even with the reduction in supply from OPEC. It's the first time since 2014, I'm going by memory, that OPEC made another move to keep production off the market, but I don't recall nearly a 5% drop happening on the last one that occurred. I think you got to go back many years ago. So the question is, if you rally, the resistance is 67.46 to 67.92. Should the market keep dropping, 61.51, potential support at the lower Bollinger Band. Close over 67.92 next week, and I will say higher lows, higher highs, back into an uptrend. Don't do that, have the resistance right there. In WTI, this is classic. You went up last week, hit the 18-week average of closes, still very much in a downtrend. The resistance, if it continues, the next point of resistance, the 100-week average. You went this week, hit a high of 60.28, just missed it, honestly, by 10 ticks, and a big reversal down week. So if you're going to keep momentum down, this week's high on a weekly chart's important. Otherwise, you set up what's called a bear trap. Bear traps are set when you get an outside week down and you take out the high of that week, either the week after, which would be next week, or the week after that. Barring that, that's a resistance point on the chart. Gasoline ran out of momentum against the 18-week moving average of closes, never did make it to the lower Bollinger Band. Momentum is flat. The trend, as defined by the swing line, is higher lows, higher highs. The settlement, though, at 192.67 is squeaking out. If it settles there over the 18-week moving average of closes, I'll define that as bullish. So I see support on breaks between the 18 and the 100-day average. Pop over this 197.87, you could have a 2 in front of these markets fairly fast. In the heating oil, you went right up to the 100-week average in the 18 and you stopped. The trend, well, I really should get rid of the zero. I didn't pay attention to that today. That would be pointing down. I'd have lower highs and lower lows. So that's how it should be pointing. Bad, Ira. Resistance right in these 2 points at this point. If you take out 199.18, I think the bulls will have a day with it. I think they'll say they've grabbed control over the market. That means the bears support that resistance line, and if they can get a drop in the market, maybe you get to 180.76. Remember, it is summer, and it's getting warm, and the rain is moving on. So people are going to be in their cars driving around, and that's what you got to think about. As you can see, as we're coming into that 2 o'clock time frame, 3 o'clock, I'm sorry, not getting any more of a real bounce in these markets, sort of just about where they're at, pretty quiet at this point. And that brings me to reminding you, I know if you're like me, you question your trade selection. You have to. I want to buy this. Should I do it? I wish I could lean over and get somebody else's opinion. Just not that they change my mind, but I'd like to see something. I want my confidence in that. Well, that's what I try to do for you each morning. And believe me, some of my calls are great, some aren't great. That's how it works. But each morning you start off with my trade ideas. I record at 6, or I try to do it even before then. That's AM, Central Daylight Time. And my charts will look like this. They're going to be black with different studies on them, more moving averages than you're used to here, and a couple of more tricks. But I go through 40 futures charts and typically 4 or 5 ETFs. And the idea here is I've already read about Asia, Europe. I'm going to be able to talk to you. Technical analysis from the chart, what the fundamentals are that's going on, and I'm going to offer specific entry, exit, stop points, long-term objectives. It's a mixture of for the swing trader, for the longer-term trader. I'm throwing the ideas as the charts are, at least my read of the charts, as to what's coming out. The idea there, give you some more ideas, maybe helps your own confidence. I cover everything in this sequence. So let's assume you don't want to watch all this. You wanted to get right to the energies. Well, on the bottom of the curve, there's a pull on the videos where you're recording. You just move it, you can get there, and it tells you what section you're in. And there's a lexicon on the side. Just hit energy, it'll take you right there. We make it really easy to get around what we're doing. And the idea for me is getting it out, getting it in your hand, so that whatever time zone you're in, it comes out in a way that is before U.S. major market reports are coming out, but I've had a chance to see what Europe's doing, Asia's doing, and the chart action, because practically everything trades on Globex is already up to date, live, and going for you. How do you find out more about it? Go to our website under Research or Education. It's very inexpensive, $7.95 for 30 days. After that, if you want to stay with the service, you can go to a 1-year subscription for $13 a month, but you pay it up front, or go month to month for $15. Pretty simple. I'm Ira Epstein. Why not see if you like it? It's $7.95 for, what the heck? I'm Ira Epstein. Take care. I'll talk to you all Monday.